February 23rd, 2010 to order. Please take it away with the interim financials.
Thank you, Mr. Chair, members of the committee. My name is Bob Samario. I'm the interim finance director, and if we could, we do have 3 items on the agenda today, and I'd like to start with the 6 months interims for the redevelopment agency. We don't have a formal presentation, as we normally don't, although we do have Mr. Brian Bossi, the redevelopment agency manager, who can answer questions you might have. Otherwise, we can move on to the other 2 items. And if I could, I would suggest that we start, after the RD, we start with the investment report first, and then we end with the mid-year report, if that's okay with the committee.
Are there any questions about the RDA interim financials before we approve those? Questions?
Nope.
Can I get a motion to approve the RDA financials?
So moved.
Second.
All those in favor, please say aye.
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 Okay, well, great, thank you. So we'll move on to the investment report, and I'm going to turn it over to Jill Tarr, our treasury manager.
As a non-quarter end report, I will walk you through the investment activity for the month of January and answer any questions at the end. We do ask that the committee accept the report and forward it to council for acceptance at the end. I'd like you to turn your attention to the screen, which shows the first page of the attachment of the investment report. This is the activity and investment report for the month of January. As you can see, we had 2 purchases during the month of January. We purchased on 113 a Federal Farm Credit Bank note for $2 million. This was a 5-year callable piece at 3.18% yield to call and yield to maturity. Has a 1-year call protection, and so we thought that was nice to lock in that 3.18 rate for a year as a nice LAIF alternative. LAIF for the month was running at 0.56. The second purchase we did was on 115. That's an FHLB note also for $2 million. This is a 2 3/4 year bullet, which means we'll hold it to maturity and the issuer cannot call it during the term, and that was at 1.7%. Down below, you'll see that we had 2 maturities. The first, midway through the month of January, was our Berkshire Hathaway medium-term note. That was $2.25 million that matured, and we also had an FHLMC note mature for $2 million. It's interesting to note that the FHLMC note was a 3-year bullet that we purchased 3 years ago, and we purchased it at a discount, and the rate was 5.12%. And just 3 short years later, we purchased back into our portfolio a similar bullet, just a little bit shorter, at 1.7%. So it's down 342 basis points in 3 years, and it's just reflective of what we're seeing in the market. In summary, the LAIF activity for the period, we had $19 million in deposits, $11.5 million in withdrawals from LAIF for operations for net LAIF activity of $7.5 million. Over on the right-hand side of the page, you'll see a summary of the interest revenue for the month of January. Interest on the pooled investment portfolio was $353,742. The interest on the cash that's held up at LAIF, which is the investment pool run by the state, was $13,767 for total interest for the month of January at $367,509. If we turn to page 2 of the attachment in the investment report, we get a snapshot of our position at the end of December, at the end of last month, as well as at the end of this month. The total cash and investments held in the portfolio at the end of December was just over $166 million. Down below, you can see the total at the end of January was $173.5 million. Roughly, you'll see it go up because in January we received large property tax payments for both the city and the RDA, which increased the cash that we had on hand. The balance up at State Life at the end of January was $52.6 million. We held in the portfolio two $2 million certificates of deposit at Montecito Bank and Trust. Our federal agency notes held in the portfolio are $98.9 million at the end of January, and $8 million in corporate medium-term notes. Also held in the portfolio is the Santa Barbara Airport promissory note. That's a 20-year note that we loaned to the airport to construct the quick turnaround rental car facility for the maintenance there. That's $7.2 million. And cash on hand at the Santa Barbara Bank and Trust money market account that we used for operations was $2.87 million. The yield to maturity on the portfolio declined slightly in the last month from 2.735% at the end of December to 2.59% at the end of January. And the overall portfolio shortened slightly by 26 days, reflecting the higher cash balances from 893 days to maturity down to 867 days to maturity. And with that, I'll answer any questions you might have.
Any questions from the committee? Can I get a motion to approve the investment report?
I move to approve the investment report.
All those in favor, please say aye.
Aye.
Opposed? Unanimous.
Okay, so we're on to the third item, which is the media report, which really covers the period July 1 through December 31st. And as you know, we always bring to the Finance Committee and Council every quarter a comprehensive report on where we're at, budget to actual for both revenues and expenses. I wanted to point out that, as you know, this Thursday, 2 days from today, we have a special budget work session to talk about fiscal year 2010 and as well as 2011. And we will be talking at that point about our revenues and what we're seeing for this year and next year and how that impacts our projections for our deficit of 2011. So this discussion here is going to go into some detail. We won't go as much detail on Thursday, but hopefully this will provide you a good foundation or base for what we'll be talking about in less detail this coming Thursday, but I think it will help to have this discussion today. So with that, I'll turn it over first to Jill Tara, who will cover our general fund revenues.
Chair Williams and committee members, Jill Tara, Treasury Manager. Today I'm going to discuss the mid-year results for the general fund revenues. Rudy Livingston will cover the expenditure side of the report. And I'd also like to show you some revised staff projections for the major four revenues based on the results year to date and some updated assumptions that we've made in our revenues. So first of all, I'd like to turn to, this is in attachment 2 of the council agenda report, and it's page 1. And I'd like to walk you through this table, which is the overall summary of revenues for the general fund, and this is for the 6 months ended December 31st, which is our mid-year snapshot. In the column at the far left, you'll see all the different major general fund taxes, and down below the major revenue categories. And the first 6 columns in the body of the table show the current year analysis, and that's where we look at how much of the revenues we've received year to date and compare them to the budget. Over on the far right-hand side, you'll see the prior year analysis, and that's where we compare our collections year to date at the end of December to how much we collected last year at the end of December. So it's 2 different ways of looking at it to give us a good basis for evaluating where we are in the year. And certainly when we come to you in the first quarter, it's difficult to make, broad sweeping an analysis because so many of the revenues are seasonal in nature, as well as the fact that in this environment where the revenues just keep sliding away from us, it's really difficult to project out another 9 months. So this is the first point where I think we can start to really zero in on what we think our year-end revenues will be. The first column shows the amended budget as approved by council, and this is unusual. Usually at the mid-year report, we'll show the adopted budget there because we wouldn't be coming to you for any revenue adjustments until usually the mid-year report. But in this time, when we adopted the budget, we could see that the revenue projections that were contained in the adopted budget were in many cases overly optimistic based on what we were experiencing. And we came back in November and council reduced the revenue for several revenue line items. So that's the amended budget column. The next column is year-to-date budget. And for the taxes shown, that is a seasonally adjusted average. We take the 3-year average for each of the tax revenues of how much we collect, usually by mid-year, and compare it to how much we actually collected in the next column at the end of, for the first 6 months. The next column is the difference between that year-to-date budget and the year-to-date actual. I will note that below the line for the total other revenues in the general fund, that year-to-date budget is just 50% in most cases because they're less seasonal and it's easier just to make a straight line projection that way. The next two columns show the year-to-date percent received, and that's based on the year-to-date actual column as a percent of the amended budget. And the 3-year average benchmark takes the year-to-date budget as a percent of the amended annual budget. So that's how we look at our current year analysis comparing collections to budget. Then over on the far right is the prior year analysis, and we can see how much we've received for each of the major revenue categories at the end of December in fiscal year 9 last year, and look at the variance to that. So with that, I'd like to highlight a few things. You can see in the middle of the page in the total taxes row, the year-to-date variance is $1.8 million below the year-to-date budget. So at the end of December, we received 40.8% of the budget, and typically in a normal year, we receive 43.8%. So we're doing a little worse than is our historical average. If you look at it in terms of just revenues that have come in compared to the prior year, year to date we've received $25.1 million versus the prior year to date actual, which is $28.6 million. So that's 11.9% decrease over what we collected at the end of December last year. And it's important to note that when you look at that year-to-date variance column, you can't just take that times 2 and say, okay, well, that's where we'll end the year. In a normal year, that benchmark average gives you a pretty good idea of where you're going to end up. But in a financial or an economic situation like we're in now, these results have caused us not only to update just based on the first 6 months' activity, but also to look at some of our assumptions. So in a moment, when we finish with this table, I'll go through our revised projections for sales tax, property tax, UUT, and TOT. If you go down to the middle of the page, all the way at the bottom, you'll see the total of the other revenues. Other revenues are also running under year-to-date budget by $1.3 million right in the center. So year-to-date, we've received 46.8% compared to on a 3-year average, or just usually on 50% of the year, 49.9. Overall, general fund revenues are running $3.1 million under budget, and if you look at collections compared to last year, 9.3% under what we collected last year. I would like to just in the other category, or the other revenues category, go through a couple of the notable variances for you. In the use of money and property line item, which is about halfway down the other section, you'll see the year-to-date variance of $122,000, right there in the center. And that's primarily due to interest earnings above budget when you look at it on comparing it to 50% of budget. But the methodology we use to forecast interest for fiscal year 10 assumed a higher interest rate at the beginning of the year, realizing that we would replace our investments with lower earning interest. So by the end of the year, we expect to be earning far less and consume that surplus. So we don't expect that to be there. The next row down shows intergovernmental being under the year-to-date variance being roughly $900,000, and that's due primarily to mutual aid responses. We've had far fewer mutual aid responses than we had planned for in the budget. The good news is that we don't think we'll end up, $900,000 or $1 million short on a net basis to the general fund, because the revenue that we receive is a function of how much we spend. So if we don't respond, we won't have the expenditures either. And we're thinking at this point, with no further mutual aid responses, that will be about $250,000 short on a net basis, which is far less than showing at mid-year. The fees and service charges category, That number shows down roughly $250,000. We are seeing some surpluses or some positive year-to-date variances in planning and building and safety fees, as well as public works engineering work orders. But primarily that negative variance is due to Parks and Recreation, with their year-to-date service charge revenue being down, far fewer facility rentals, as well as declining participation in programs, presumably due to the economic conditions. It also represents a slight shortfall for the city attorney. As you may know, the city attorney, for time they spend on RDA, bills out to the RDA, and so they've spent less time this year on RDA legal issues and therefore have billed less. So in the grand scheme of things, that's not entirely a bad thing. The last one I'd like to mention is the budgeted year-end variance, which is showing a $680,000 shortfall to the year-to-date budget. And I'd like to go just remind the committee what this revenue is. Typically, in a typical year, this represents what we expect to achieve in either revenues that come in over budget during the course of a year or expenditures that come in under budget. And so we'll never ever realize any revenues in that line item. It'll be realized in a combination of other revenue line items as well as other expenditure line items. Now, what's unusual about this number for fiscal year 10 is that in fiscal year 10 we realized in this kind of economic environment we're probably not going to realize any revenue surpluses. So we only budgeted the piece, half of it corresponding to the expenditure savings that we expected at the general fund. But in any case, although it's showing a negative variance, that particular line item won't show any variance. Okay. Are there any questions on this table? Okay.
Any questions, Mr. Francisco?
What I'd like to do is turn to some revised revenue projections and just show you, based on the year-to-date performance, as you saw in the first table, and how that might affect the assumptions for the rest of the year, what we think we're really looking at on where we'll end the four major sales taxes, or four major taxes in the general fund, which make up the bulk of our revenues. So you'll see the actual for fiscal year 9 for sales tax was $17.6 million, and that was 11% down from fiscal year 2008. So that was a substantial decline, and we hadn't seen anything like that in our sales tax in as long as anyone could remember. For fiscal year 10, what we did for the adopted budget is we took the estimates that came from the State Department of Finance that the state was using to estimate their own sales tax in the absence of us having any other better information. And that resulted in us adopting a budget with a 1.4% decline in sales tax. By the time November rolled around and we were coming to council to amend the budgets for some major revenues, we had some additional information. First, we had the June 2009 quarter sales tax, the actual sales tax for the last quarter of fiscal year 09, which came in at a decline of 16.2, which was far more than we had assumed. And then also, we got new estimates from the State Department of Finance that said, we know we issued these with a 5.1% decline in September and a 2.7% decline in the December quarter and so on. Here are your new numbers. And we said, well, again, we don't have any better information except to know that our June 30th sales tax came in far worse than we thought. So we amended the sales tax downward consistent with the Department of Finance estimates and assumed that at that time we thought sales tax would come in at $17 million and a 3% decline. Well, in December we received our sales tax as shown in the white cell in the revised fiscal year 10 column. And our sales tax, instead of being down the 11.5 using the guidance from the Department of Finance, it came in 16.9, which was consistent with the previous quarter, June 30th quarter, which came in 16.2% decline. So we said that, you know, in all likelihood, we don't think that the December quarter is going to turn around to the extent where it will be flat. So staff is lowering that to 5% and thinking that by the remaining 2 quarters in the fiscal year, it'll level out. Overall, we think we'll end the year at $16.4 million, which is down 6.6%. So far worse than we even imagined in November. I'd like to move on to property tax. And this is an estimate. When we adopted the fiscal year 10 budget, we adopted $23.86 million, but with a budgeted growth of 3%. And that was based on an estimate from the county. We work closely with the county in trying to get a handle on what the property tax roll will be for our city. And they thought at the time when this estimate was given to us, which was December of 2008, and they said that would be a pretty good number, and we looked at our historical averages and thought it was a good number. Well, we received additional guidance in the first quarter of this fiscal year and came back to council and amended the budget to reduce it by about $400,000 and amended the growth to 0.8. As it turns out, the 0.8 was the growth for the county overall, and our own city growth, once the tax roll was finalized, was really at about 0.3. So based on the final numbers that we got from the county, we know what our property tax will be. We think that we'll end the year at $23 million, which is almost a % decline. The one thing I would like to note is the only piece we don't get from the county, as shown up there, is the supplemental. And year-to-date through January, not even through December, I wanted to bring you the latest number. Year-to-date through January, we've received approximately $123,000. So we ratcheted down in our own staff estimates the supplemental down to $300, which is on the low side for the historical average, but probably more reflective of what will happen this year. So that's sales tax. I mean property tax. Apologize. Moving on to transient occupancy tax, which is TOT. This is a revenue that we watch very closely, and I send out regular monthly updates to the council members.
Before we mentally leave the property tax, do we have any questions on either property tax or sales tax? I have one question, which is, are we seeing this more because of foreclosures or reassessments, or, you know, in my time on the council, property tax has been fairly constant, and it's still, of course, more constant than the other sources, but and that's because, you know, generally the base doesn't fall very far. But is this coming because of a rash of reassessments, or because of sales at a lower level, or because of foreclosures, or a combination of three, or do we know the answer to that question?
It's a combination of both, and I wish I could tell you the mix, but that kind of information the city doesn't receive, and that's all with the county, and they have numbers countywide or South County-wide, but they don't have the numbers available for us for our specific city. So in this particular year, fiscal year 10, it's a combination of lower median home values when they're selling and reassessments lower, and there are a number of reassessments in the city. So.
Okay. Dale?
Thank you. Jill, this was actually a question raised to me by Councilmember White, and I didn't know the answer. I was just wondering, since we have this enormous lag in the reporting of sales tax data from the state, is there any way that we could get information sooner by some kind of survey among local merchants? Has that ever been examined?
No, we haven't examined.
I have no idea how they report their data to the state, but
well, they report by the next month, and then I think they have 30 or 45 days to report their information to the state, and then it takes the state 30 or 40 days to crunch the numbers. But
right.
Perhaps Bob Samario could give a better answer to that question.
Chairman and Councilmember Francisco, I think that question will require us to kind of to work with the chamber and see to what extent can we get sort of the businesses to participate in providing us, which could be proprietary information.
Sure, I understand.
Their sales, and I'm not sure how much cooperation we'd get, particularly from the big players, as to what the revenues are. We get that information, although it's lagging from the state and on a employer, or it's not employer, but a business by business. But I would add that I think we have really good economic data in a normal sort of time. We get data from our consultants. We track other kinds of economic data. And so we also get advances from the state that's based on what they assume the growth will be. I think the problem is that we're in an unusual time right now, so that even if we were to kind of go to the chamber and get some information, we may not be able to derive a lot more information from that we get from them. I think the data sources we have now are pretty reliable. I just think we're in an unusual time, and so I'm not sure how much help that would be, to be honest.
Okay. Well, we can talk about it offline sometime.
Okay. So, TOT.
TOT, actually that question feeds very nicely into the TOT discussion, because in our city, with the lag in the sales tax reporting being a full quarter behind, we really rely on transient occupancy tax as a leading indicator for how we're doing in our city. It's reported the following month by hotels when they file their TOT returns and pay their tax. So we know pretty quickly, how things are going out there, and use this as a basis certainly to feed into what we think sales tax will do. So this is our leading indicator. As you can see, for the adopted fiscal year 10 budget for TOT, the adopted budget was just over $12 million and forecast a 2.2% decline. That did include $100,000 in vacation rental income, and when you were just looking at the base TOT, we forecast a 3% decline. When we amended the budget when Council amended the budget in November, we had additional information. We had July information, which had come in 14.6, and certainly caused us to go back and look, knowing economically we didn't think it would rebound as quickly. So we lowered the base TOT estimate to $11.25 million, which is a 6.5% decline. Factoring in the vacation rental income, it came overall to a 5.6% decline. We now have 5 months of data through November, as shown up here. Through December 31st, we have 5 months of TOT collections. And you'll see that in the first 5 months of the actual data that's up there, 4 of those are double-digit declines. And while it looked as though we had really recommended ratcheting those back to more realistic levels, you can see that the July, we knew what that was, the 14% decline. But look at August. August came in with a 19% decline versus 23.1% decline. September, 7.5% to the amended growth of 10%. So this came in a little bit better. And then we got to October, November, and December, and it didn't rebound as we had anticipated as recently as the first quarter. So overall, in our staff estimates estimate that the base TOT by the end of the year will be $10.8 million. We just took for the remaining months of the fiscal year and assumed a 6.5% decline each month, realizing that some may be more and it may get a little bit better from the year. And at some point, if you look over at the actual fiscal year 2009 from January through June, there are some months in there with huge declines, and so it would be difficult to get we certainly hope it would be difficult to get huge declines on already a big decline number. So the revised estimate in total for TOT is the 10.896 and a 9.5% decline. The last major revenue I'd like to talk about is the utility users tax, and we forecast this out by sector, and this is one that's particularly difficult to forecast because each of the sectors behave so differently depending on, we've seen our cable sector suffer because of lower demand for cable services. We assume that's due to the economic environment and people just cutting expenses where they can. We've seen great declines in telephone because of all the increased cell phones. The gas and electric sectors have suffered. One, the gas, because the natural gas commodity price has fallen so dramatically. And in electricity, while it's not a commodity per se, commodities are used to generate electricity, and so as those prices fall, so will the electric prices, and that affects our UUT. So our adopted UUT for fiscal year 10, the current year, was at $7.24 million and forecasted overall a 2.5% growth assumption. In November, we came back and looked at how some of the sectors were doing and said, okay, I think that we should lower those a little bit, and we lowered them to 6.9 million, assuming an overall growth of 1%. We now have a good 6 months of data, and based on that, we think that $6.7 million is closer to where we'll end the year, which is an overall 2% decline. And the driver for that primarily is gas. As I mentioned, that natural gas commodity prices have just dramatically fallen since the beginning of the year, and it's reflective in the TOT, or the UUT that we're collecting. I have one last slide to summarize just the revised estimates that I've just gone to. So you can see that in addition to what was already reduced in the amended budget, staff expects to end the year another $624,000 short in sales tax, another $400,000 short in property tax, another $456,000 short in TOT, and another couple $100,000 short in UUT. That totals about $1.7 million, and when you combine that with some other revenues that we're expecting to come in under budget, overall we expect to end the year about $2.35 million short of our amended budget. So I wish I had better news, but know that we're looking at these carefully. And with that, I'd like to turn it over to Rudy Livingston, who will go through the expenditure side of the report, as well as discuss the performance of the enterprise funds for the first 6 months of the year.
Thank you, Rudy.
Good afternoon, Mr. Chair, members of the Finance Committee. It's a pleasure to be with you. It's my first opportunity to be here with the new Finance Committee, so it's going to be an interesting voyage here this year. So enjoy working with all of you. As Jill indicated, I'm here to talk about. First, we'll talk about the general fund expenditures, and this table that you see up here. This is a summary of the general fund expenditures by department within the general fund. This is slightly different than the schedule that you see in the agenda report, because we always have this issue. We have this thing called we call encumbrances, and encumbrances are essentially commitments to expend funds for various services or supplies or whatever. They actually haven't gone out the door, but we've committed those funds, and so encumbrances typically tend to be, a lot of them are blanket purchase orders, a lot of them are contracts that are entered into at the beginning of the year, and those are utilized throughout the year. So if you, in the early months of the year, they really skew the numbers because it looks like you got this huge expense, huge expenditure in the beginning of the year, and as the year goes on, you use these things, you get more months behind you, it kind of evens things out. Once we get to the mid-year, we start including the encumbrances with our analysis here. And the schedule in the agenda report actually shows it both ways, with the encumbrances and without the encumbrances. But for our discussion today, we'll look at these numbers with the encumbrances. Just want to walk you through the schedule briefly. Over on the left-hand side, we obviously have the departments, and next to that is the amended annual budget. As Jill indicated earlier, we are usually looking at an adopted budget. Sometimes we have a few adjustments in here throughout the year. Somebody comes to council and they have some additional appropriations that they need. This year we did something unusual in that we actually brought an item to council in November to recommend a reduction in revenues because we knew the revenues were going to be coming in much lower than we anticipated. The offset to that was about $1.6 million in expenditure reductions in our budget. This schedule here, this column includes those expenditure reductions. So we're going on the lower base here when we're looking at this analysis. The year-to-date budget column is calculated at 50% of the annual budget. We just do a straight line on this, recognizing that a significant portion, about 75% of the cost or the expenditures in the general fund are actually related to salaries and benefits, and those tend to be incurred fairly evenly throughout the year. So we just use a 50%. Excuse me. The next column is the year-to-date actual, which is the actual expenditures that have gone out the door. We cut a check for something, we pay a bill. Those are the actual costs, including payroll and all the things that we have incurred throughout December 31st. And then that last column is the encumbrances. Well, the next to last column, we have the encumbrances, and then we look at what our variance is for the year. And if you look at these variances here, overall, the general fund variance is $614,000 at December 31st. So we spent $614,000 less than what our year-to-date budgeted amount would be at that point in time. We're always looking at this to see where individual departments are because the budgetary control in the general fund is at the department level, and so each department is required to come in under their budgeted expenditure appropriations. There are 4 departments in the general fund that are over their year-to-date budget at December 31st. And now I want to remind you that this is not over the annual budget. This is at the year-to-date budget. And so they haven't overspent for the year, but this is just where we are at this point in time. And I want to discuss those 4 departments. The first one is the city administrator department, and Jim's probably looking at that and saying, wait, we're not over. But there's actually a really good reason for why that is over. We have some encumbrances in that department for the Spanish translation services for City TV, and those will be used up throughout the remainder of the year. But the biggest thing that is in there are payments to some of our partners, agencies, on a gang prevention grant that we have, the CalGrip grant. We paid $50,000 of actual costs out the door for that program to date. This program was actually budgeted in the miscellaneous grants fund. And before year end, we will be actually moving those costs over to the miscellaneous grants fund, and this number is going to go down. The next one that we have in there is administrative services. Administrative services was almost $34,000 over their year-to-date budget. And once again, this is really related to encumbrances that they have outstanding. In human resources, for instance, they have $20,000 of contracts or blanket purchase orders that they had to initiate at the beginning of the year, which will be used for medical services, psych evaluations for police officers, various things that may or may not be used throughout the year, and they probably will not use that entire amount. However, the way our system works, those are in there, and they're kind of skewing those numbers a little bit. The other thing is there's about $16,000 left over in the city clerk's office related to the election and duplicating costs and various other things that we have still sitting out there. The next one is the finance department, where we're $26,000 over the year-to-date budget, and this is really a factor of the contract for the annual financial audit that we have. And this will be used up throughout the remainder of the year, and it will even out. By the end of the year, we'll be in. There won't be a problem, not a problem at all. The last one that is in here is the Parks and Recreation. The Parks and Recreation Department is $153,000 over the year-to-date budget. This is primarily due to a lot of blanket purchase orders that they have outstanding at the beginning of the year for various services, for purchasing landscaping supplies and for services such as tree trimming and maintenance costs and various things that they're actually big dollar amounts that are used up throughout the entire year. And so this one is the one department that gets really skewed primarily due to those encumbrances that are outstanding. If you'll see the encumbrance column, they have $208,000 of encumbrances. With Parks and Recreation, however, they're expecting some significant revenue shortfalls, and they are looking very seriously at their expenditure side and working on ways where they can trim their actual cost by year end to reduce that net shortfall for the department. With that, I would like to, if there are any questions about the general fund expenditures, I'd be happy to answer them. Otherwise, we can move on to the enterprise funds.
Any questions before we move on? No. How about the enterprise funds?
Okay. The enterprise fund revenues and expenses are both shown on this one schedule here. We'll put them together. Sometimes we split them out, but for now we're going to look at them together. This table summarizes the revenues and expenses through December 31st with a comparison to budget. The year-to-date budget for revenues in these enterprise funds is computed based upon a 3-year average collection rate, because a lot of those revenues are very seasonal in nature. For instance, water. We have a lot more water sales in the fall and in the warm summer months and the fall than we do in the wet, rainy season that we have right now. So we factor in the 3-year average collection rate to come up with what we have for a year-to-date budget. Expenses, however, are calculated on a straight line basis, and that's just 50% of the yearly budget. Now, unlike general fund, which relies primarily on taxes to subsidize the programs and services that they provide, enterprise fund operations are primarily financed from user fees. And while the enterprise fund revenues have not been negatively impacted by the steep decline in tax revenues, they have been impacted by the negative economic factors that we've seen in the economy in the area here lately, in the state and local. We see this particularly in the areas, for instance, passenger counts at the airport, where they have been down significantly because people aren't traveling. We see this in downtown parking, for instance, because we don't have the number of parkers coming into town, so the transactions are down. And we'll talk about these just briefly when we discuss the revenues and the expenses for each individual fund. Generally, I would say salary and benefit expenses are under budget in the enterprise funds at December 31st, and this is primarily due to vacancies that we've had that have been kept open under the hiring freeze that we've implemented here within the city. One of this, as you well know, one of the biggest costs that we have is salary and benefits. And so when there's a position that somebody retires or they leave the city for whatever reason, then we have made an effort to not fill those as much as we can so that we can recognize those budget savings. And that's being reflected in these numbers. I'm going to discuss some of the more significant revenue and expense variances in each of the funds. The Water Fund has received 55% of annual budgeted revenues through December 31st, which equates to approximately $362,000 over the year-to-date budget. And the primary reason for this variance was really reimbursements from the Montecito and the Carpinteria water districts. These agencies are partners with us in the Cater treatment plant, and they reimburse the city for a share of operating this plant. One of the things that the byproducts of these recent fires we had is an increase in cost for filtration of the water system, and so those have gone up significantly. And as those costs have gone up, our reimbursement from our partner agencies have gone up, and that's really what's driving this positive variance at mid-year. Water fund expenses and encumbrances overall were actually slightly under the year-to-date variance. Under the year-to-date budget, and this isn't considered significant at this point in time. As you can see, it's 0.3%. The wastewater fund didn't have any significant revenue or expense variances, and so I won't even discuss that at this time. Downtown parking fund revenues were approximately $103,000 ahead of the year-to-date budget. And these revenues were very comparable to the December 31st revenues in the prior year. The current year budgeted revenues were actually reduced this year by $703,000 from what the prior year amounts were, because last year's results came in so far under what we expected that they scaled these back, and so they were actually very much on target from what they had been projecting in the budget. Approximately 72% of the fund revenues are for hourly parking, and the current budget was reduced in anticipation in a significant drop in the number of parking transactions this year. Through December 31st, the Downtown Parking Fund had collected 51% of their annual budget for hourly parking revenue, so they've got that pretty much on target here for this year. Now, if we look at the expenses and encumbrances were $162,000 over the year-to-date budget at December 31st. This is really a function of some encumbrances we have for special projects in the Downtown Parking Fund. Most significantly are the commuter services that we have, such as the MyRide program, bus passes, and so forth. We also have $100,000 encumbered in there for security services in the downtown area. The next fund I'd like to discuss is the Airport Fund, where revenues were approximately $407,000 ahead of the year-to-date budget. However, those are $319,000 below those from the prior year. So you can see that they've done some conservative budgeting in here. They actually anticipated that they would have a decrease of 8.5% in passenger traffic and also an 8% reduction in rental revenues. Actual passenger traffic is down about 7% from the prior year, but the aircraft takeoffs and landings are actually up 7.7%, primarily due to the hydromulching operations that are occurring because of the fires. They're going up in the reseeding of the burn areas. Lease revenues, surprisingly, have remained fairly strong and are actually 8.2% ahead of the year-to-date budget. And the airport terminal revenue is approximately 4% ahead of the year-to-date budget. Expenses and encumbrances are pretty close to where we would expect them to be, and we don't see any significant variance in there at this point in time, 0.5% off from what the year-to-date budget would be. The Golf Fund revenues were $233,000 below the year-to-date budget at mid-year and 22% below the prior year revenues. We've seen a significant drop-off in the revenues in that fund. But there are a couple of reasons. One of those is the economic downturn in the economy. People haven't been going out and playing golf as much. But one of the other issues that we've had out there, we have two major construction projects that have been ongoing out at the golf course. We've had the safety improvement plan and also a stormwater quality creek restoration project that's been going on. Both of those projects are anticipated to be completed by the end of this month. February, and they're anticipating that revenues or that the number of rounds of golf will begin to increase in March, and that they will begin to see some more normal, although impacted by the economy. However, they are estimating at this time that they will be between $336,000 and $355,000 under budget for the year. So that's a significant item that we'll have to keep an eye on for the rest of the year. The Golf Fund expenses and encumbrances were approximately $228,000 over the year-to-date budget at mid-year. This is primarily because we transferred $500,000 out of the operating fund in the golf operating fund into the golf capital fund for these capital projects that I mentioned, and so that's very much front-loaded. And as the year progresses, that variance will go down because of that. They're looking at all of their expenses in this fund, and they are looking at areas that they can reduce expenses so that they can narrow that budget gap by the end of the year. They're very hopeful that they might be able to make up the entire revenue shortfall, but that will probably not happen. But they're taking measures right now to at least lessen it, and we'll get more data on that in the coming months, and we'll keep you apprised of where we are with those. The last one that I want to talk about is the Waterfront Fund. Waterfront Fund revenue is approximately $189,000 ahead of the year-to-date budget. Property management revenue, which includes percentage rents on the restaurants and the other facilities that we own, is below the year-to-date budget. But marina management revenue is actually exceeding the year-to-date budget. And this is primarily due to favorable slip transfer fees that they've actually returned more to their normal level. We had a significant drop-off in the prior year. And through December 31st, we have actually already received $50,000 more than the annual budget because they reduced it significantly for those lower numbers. Waterfront fund expenses and encumbrances were $439,000 over the year-to-date budget. But this is due to a lot of blanket purchase orders and contracts that they have outstanding for maintenance costs and various supplies and services and things that will be used throughout the entire year. And they're projecting that expenses will be on target at the end of the year. Now, this concludes my report on the interim financial statements, and I'd be happy to answer any questions that you might have before we move on to one proposed mid-year adjustment that we have.
Please proceed on. We're short of time, so just
Yep, this will take just a moment here. We only have one mid-year proposed adjustment. The fire department is requesting $43,712 of additional appropriations to replace their breathing air compressor fill station. Had to write it down. This apparatus is actually used to fill their self-contained breathing apparatus bottles that the firefighters use when they're out in the field. The current one that they have is in need of repairs, and the manufacturer is no longer in business, and they're going to have to purchase a new system. This will be paid out of reserves that have been accumulated in the miscellaneous grants fund for hazardous materials expenditures. And the cost of the equipment may be up to $50,000. We're requesting $43,712 of appropriations because that's what we have in those reserves right now. And if the cost exceeds what we're appropriating, the additional cost will be paid for out of the existing appropriations in the fire department. Now, these are, once again, this is miscellaneous grants fund, not general fund, where these costs are coming from. And that's the only other item that I have. And with that, I conclude my report.
Can we get a motion on the increase in appropriation, or are there questions?
I so move.
Second.
All those in favor, please say aye.
Aye.
Opposed? Thank you, Rudy. And that's it for today. We'll adjourn. Thank you.